Handy tips from the auditor. Thank you.
I know this is the session everybody was waiting for. I get right into it. And there's the saying, auditors come in after the war and buy only the wounded. And that makes sense because we always look at historical information. We unfortunately come in too late to make a difference in the year we're looking at, but we hope we can make a difference, and we will make a difference in the next financial year when we can give our recommendations to the management. The audit or review basically provides assurance that information in the financial statements are accurate. During our audits of non-for-profits, normally on the smaller to medium-sized scale, we find pretty common errors and issues. And I thought I would share some of them with you today and why it's important to fix it. Some may sound pretty simple, but they do tend to happen time and time again. Issue 1, not verifying the ABN and GST registration of new contractors and suppliers before claiming GST input credits on invalid tax invoices. We tend to find this happens a lot where the organisation deals with sole traders, contractors. They give them a tax invoice. They're not registered for GST. They don't even have a valid ABN. And you can overcome that issue by going to the Australian Business Register website, the ABR website, and do a lookup on the ABN lookup link as I provided there. And then you can see, is the ABN valid, and from when is this business registered for GST? It's just, you may run into issues with the ATO if they find that that's been going on and you haven't been paying attention. Issue 2, not ensuring that the information on the business activity statement lodged agree with the accounting records. Every audit we go into, we do a reconciliation of the information lodged per the business activity statement against the information that's been collected in the general ledger to ensure that GST collected have been paid correctly and that GST input credits haven't been overclaimed. And that's part of what we'll then highlight that problem to the client. Sometimes we find that, especially in smaller organisations, if they bought some equipment on a lease, that GST, or an HP, that GST never gets claimed because it doesn't really go through the books per se. So we have found like a $10,000 error at a client where that happened. It's also important to ensure that you treat or do the GST treatment of your client suppliers, that it's basically you're consistent doing that. And one way to do that is to just get a list of every supplier that supplier have made for the year, look at the tax code and see if it's a GST or non-GST supply, and it'll pretty quickly pick up if you've been consistent. Issue 3, the inaccurate payment of superannuation for all employees. We sometimes find we go in after one of the bigger audit firms has been left the client, and we find a lot of issues where there's relatively small differences on superannuation payable accounts, but they've never been rectified because it was immaterial. We believe that you should know how much money are due to your employee's superannuation provider so that you can ensure you pay over the correct amount on a timely basis. And you can do that by performing a superannuation reconciliation monthly or quarterly, depending on when you pay it over. Issue 4, the incorrect calculation of the superannuation guarantee charge. Sorry, there's a bit of a mistake there with the abbreviation, so it should be SGC, not SCG. What we find is that we actually recently found in a client's payroll records that the client was deducting a fixed amount for their superannuation, which was basically 8-point-something% and another one was 10-point-something%. We also find that people have calculated the SGC at the wrong rate. So it's always important, and sometimes they also calculate superannuation on stuff that's not ordinary time earnings. So they do it on allowances, they do it on leave loading. If your payroll system are not set up correctly, you can run into this type of issues. Issue 5, not ensuring that all pay-as-you-go withheld tax is paid over as due. Once again, we find that the pay-as-you-go payable account does not agree to the last month or last quarter tax withheld, and that's just plain laziness, and it's basically, it could indicate an issue in an organisation if it doesn't agree, and that's something we will do as part of our GST information reconciliation. Then we'll work out what's going on, because I find in this, one of our clients, I think 2 months, a year apart, they basically decided to pay over to the ATO the net wages amount as the pay-as-you-go amount, so it was probably $10,000, and nobody ever did a reconciliation on what has been paid over, so that's something we picked up for the client. Issue 6. We sometimes find the inclusion of fixed assets constructed on land owned by another entity. This tends to happen at a council or a church or somewhere where your community centre does not own the land they operate from, and they got probably during the GFC, they got a lot of money to spend. They built a building, and that building just ended up on their accounts. We had a client that happened with, and we had to reverse the whole transaction, and the financial position was pretty dire after that happened. So that's something we're very careful of. Sure.
We just had a building put on property.
Yes.
Right? And it's then owned by the city of Monash.
Yep.
However, some of the assets that went inside,
Yep.
fixed assets that went inside, we paid for.
That's fine.
Now, we're not going to, Kim, what's the name of it? We're not going to charge it out over the next few years?
Depreciate.
Depreciate it.
Mm-hmm.
Is the city of Monash allowed to depreciate the fixed assets that we put in there?
I wouldn't think so, because they're not using it. Is it something you can take away when you leave? Are you talking about improvements to the property?
Yes.
Then, and you probably don't even pay rent for your property, do you? A little bit. So you,
But they take it back, like we pay $37,000 a year and then they write it off.
yeah. So basically, yeah, you probably shouldn't show that in your books at all, and they should show it on their books. If you're not going to get, if it's not something you can take away when you leave, then I wouldn't take it into account. Okay. Issue 7. The use of journals in control accounts like the bank, trade debtors and trade creditors. That's lazy accounting. And we find that sometimes people are too scared to make an entry that consists of 3 or 4 different legs, and they want to do a journal. And if you do the entry right in the first place, you don't have to do that extra step. It can also hide fraud. I think one of the big cases, Clark Peters, the woman put a lot of journals through the trade creditors control account and hide probably $20 million of fraud, so don't put journals in control accounts. Issue 8, inappropriate reconciling items. When you look at a bank reconciliation or a credit card reconciliation, if there's old outstanding items on the reconciliation, investigate why it's there. If it shouldn't be there, write it off, clean it up, because otherwise you're not going to, if it's a check, you may phone the supplier and say, have you banked a check, what's going on? You may want to reissue it, but it's just clean it up and make sure it's correct. And if there's any direct payments as an outstanding item, I would look at that as well. That could indicate a problem. Issue 9. Detailed fixed asset register and inventory list of small electronic equipment not maintained or not accurate. A lot of our clients don't have a fixed asset register, and that's just because historically they never had one, they can't get it right, so that is a problem. The thing you can do nowadays with everything that's small and the small gets smaller and smaller with electronic goods is to have like a library type inventory listing where you can say, okay, I've got 10 laptops, I've got 5 PDAs, I've got 7 iPads, but I know where each of that item is. So one went to Andre, one went to John, one went to Michael. So, and that person is responsible for that item. And when you confirm with that person at the end of the year, okay, do you still have this item? They should basically say, yes, I have this item. And that way you keep track of that small items that can really disappear quickly. Another way is to have, look at each, depends on your type of organization. If you have like a training organization, you may have an inventory listing per room, which you can regularly check, okay, is everything still there? And that's probably more on the bigger items like chairs, tables and things, not on your electronic equipment. Okay, issue 10. Once again, we're back onto employment entitlements. This seems to be my favorite subject. It can go wrong, it will go wrong, unless you pay attention to your payroll function. And that's all I can say on that, because many times we see that it's not correct, and to go back after the fact to go and sort it out is very difficult, unless it's long service leave. You can't. It's difficult to work out how much sick leave a person have taken 5 years ago, how much annual leave they've taken 5 years ago, unless the records are there. Issue 11, supplier transactions are recorded when paid rather than on an invoice date, and that's on an accrual basis. So what we want to achieve by recording it on the invoice date is to ensure that our liabilities to the suppliers are always correct. You'll be able to match your payments easily to the invoices, and in some of the accounting software you can actually have a due date, and you can work out manage your cash flow that way. If you do it right, you can do quite accurate forecasting of your cash flow. I think issue 12, accruals and prepayments at year end are not calculated accurately and completely. That's when you do accruals accounting. Please go and have a look at the invoices you pay after year end to ensure that invoice does not relate to prior to year end. And another thing is look at stuff you pay that relates to the next year. It's because my main aim is to ensure that expenses and income that you record happens in the right financial year, so that the information you provide to the board and the members and ultimately in financials, everything falls in the right year. Issue 13, trade creditors listing not reconciled to supplier statements on a regular basis. That means you cannot be sure that your trade creditors are accurate. And if you do this, you can ensure that your invoices are recorded in the correct financial period. You can sort out anything on the creditor statement that's not on your books, if they not recognized credits. So any duplicate invoice, duplicate payments, you can easily pick up if there's a problem. Issue 14, invoice numbers for suppliers not recorded. Bit of a bugbear of mine, because we sometimes see that you double pay a supplier, he's not going to tell you. That's the big problem. And if you deal overseas, they're not going to give you your money back. So if you capture your invoice numbers, it helps you identify if there's more than one entry for the same invoice number. You don't pay the same invoice twice, and it helps with your reconciliation of your supplier statements. The review of issue 15, the review of trade debtors age trial balance not performed regularly of your due care. People need to review the age debtors so that you don't end up with really old invoices on your trade debtors that you're not going to recover. And you need to ask yourself the question, why is it still outstanding, so that you can make an adequate provision for either for doubtful debt or bad debt. And you need to follow it up, and that way that will also help with the cash flow. Issue 16, security deposit and rental bonds for commercial properties are not kept in interest-bearing accounts, especially in Victoria. Well, you're not going to get a lot of interest on that account, but you still need to record that asset accurately. I've seen cases where commercial property bonds have been embezzled very easily when they're not kept in interest-bearing accounts. And that's normally where it's kept and that can be, that rental bonds can either be kept by the estate agent or by the landlord. issue 17. Security deposits and rental bonds, the interest-bearing account is not in the name of the client. So if you have a couple of them and you don't keep track of them, how you know you're going to actually collect them when it's due, and your assets aren't accurate. Although nowadays we see the requirement for bank guarantees are becoming more frequent. Issue 18. Incorrect declaration of salaries and wages on business activity statements, especially where there's salary sacrifice arrangements. So sometimes the accountant or bookkeeper will declare the gross wages and not take into account the fact that there was salary sacrifice payments made, which can lead to the fact that misleading information are being presented to the ATO, which will lead to queries after you lodge your pay-as-you-go withholding summaries after 30 June. Just something that's not on the slide, which is a bit critical. I probably thought of it a bit later on. Issue 19. Well, if you have a standalone system for which you process accounting information, like for childcare, where you basically have a separate system because you've got all these claims from the government coming in for the childcare rebate and childcare, all the things you get in relation to that, you need to reconcile that information to the accounting system. I know about at least 2 instances of fraud where that haven't been done and the cash disappears. I know there's probably not a lot of cash being paid anymore, but if you do receive cash, make sure you reconcile that standalone system. I mean, and like a neighbourhood house would have their training stuff. And so there's always opportunity. While there's cash in play, there's always opportunity for fraud. And that's why you need to do like a high-level reconciliation. Okay, how much do I expect to get? How much does the system say I should have got? How much did I actually get? And that's my last issue on that one. In conclusion, I like the saying because it comes from a movie somewhere, although it doesn't say good quality accounting information. The price of good quality accounting information is internal vigilance. And that comes from Wing Commander, I think. Mistakes and issues can be rectified if you know about them. We can't fix the past, but we can fix the stuff going forward. What we aim to do in our audit is basically to add value by pointing out these potential risk areas so that they can be managed and problems sorted out in a timely fashion. Because good behaviour and good internal controls start at the top, and that's from management. Thank you. Any questions?